Hello, my name is Vladimir Tikhomirov. I'm chief economist at BCS Global Markets, and I'll give you my outlook in the macro area for the coming week. The past week has been driven perhaps among the most significant events for the Russian market. I would name the new wave of weakness in the Russian currency, the ruble. We have seen ruble trading, and currently it is trading in the band of 71 to 72 rubles to the dollar. The levels that we have not seen basically from May. Only 1 or 2 weeks ago, ruble was trading at levels below 70, so we have seen a quite visible weakness in the ruble, despite the fact that the oil, the prices of crude are quite comfortable for Russia. They are hovering at $42 to $43 per barrel levels. In my view, the two major reasons behind the ruble weakness are, on one hand, the central bank recent rate cut, which was quite aggressive, to remind 100 bips down to 4.5%, which actually led many investors in the Russian bonds, particularly OFZ, to think that the weakening or rate adjustment from the central bank by now is more or less over, which could trigger the process of profit taking and has increased sales of OFZ by foreign investors who then basically convert rubles into dollars to take profits out of the country. So that added to pressures on the ruble. The second possible trigger behind ruble weakness is geopolitics. Over the past 2 to 3 weeks, we have seen quite visible rise in debates over new sanctions against Russia in the US at various levels, particularly within the Congress. To add to the projects that were already floating for some time to put sanctions against the pipeline project Nord Stream 2, to add to that, the new information was circling for the past week or so that Russia reportedly was paying Afghan rebels, Taliban, to kill American soldiers. This information was said to be not true by the Pentagon, U.S. security services, and the White House, but nevertheless, this theme continues to hover in the Congress. Even if this trigger would not work, there is a rising possibility that another trigger could work to push forward with the new sanctions against Russia, which is, of course, something that is quite concerning for investors, which basically supports a risk-off attitude to Russian assets and the ruble. So these two themes, I believe, would continue to frame ruble movements and Russian market movements in the coming week. Apart from that, there are also rising fears of another wave of pandemic, not only in the US but worldwide. So basically all these factors mean that the market and the ruble can continue to show a fair bit of weakness in the coming week or so. I think that's all on my side. Thank you.